What's up, everybody? How's everybody doing this Friday? Thanks for joining me. This is a live stream, weekly close live stream. I do this every week, 4 p.m. I've been talking to some friends on Discord a little bit earlier about the market. I think there's still a lot of talk out there. Uh, Doomer saying about if the bank contagion is going to fail. I was having a discussion yesterday with a friend of mine about that. We were having lunch, and he still thinks that small banks are going to get a run for their money, a bank run. I'm not so sure. If there's so much FUD in there, why is it that we've had an incredibly bullish week, an incredibly bullish end to the first quarter of 2023? So I want to start off with a market update. We're going to look at everything and see where things stand. Also, I got to talk about Tesla. That's a little bit sad. I had to capitulate on that today. Like always, if you're catching this late, I do this at 4 p.m. on Fridays. I have a Discord community. I don't charge for it. I just have a community where I want to talk about trading and share ideas. I'll tell you something. It's actually really important to have a team around you as a trader to bounce ideas off of. What I started the live stream with this week, this NASDAQ trade from Wednesday, I happened to be talking to some friends about the market that day, and that made it apparent that the NASDAQ hit a major level, which we're going to look at. I want to analyze that trade and talk about that. But if you got anything to talk about, make sure you put it in the chat, and we will discuss it. All right, let's see. Go through a few things here. Got everything going live on Discord, TradingView, and hi, Karen from PHX. Is that Phoenix, Arizona? Hey, Averkey. Good to see you on TradingView. Love you guys. All right. Let's see. Let's take a look. Let's do a market recap to start out with. So, wow, that is a big green bar today. So I forgive myself for doubting because coming into today, Thursday yesterday, we came up to a major high, the March the 6th high on the ES, that's the S&P Index Futures. NASDAQ also. I mean, this level in the NASDAQ, the February high, basically the high of the first rally of the year. We couldn't break it on the FOMC meeting last Wednesday. And so it's been hitting up against that level all week. And then finally today, pow, it's bullish. It's bullish. I was in a little bit of doubt today. I took a short position as we got up to it, but it was small, really tight stop. Basically, when we started doing this little maneuver right here, where it started hanging out, price action looked like this. It was worth it to see if the bullishness was going to abate, if this week we were going to get contained by that resistance, and we didn't. And fortunately and unfortunately, I have long positions, and I had a short position in Tesla, which rip, I had to close it. Man, that was, I'm a little salty about that too. I'm a little salty, I gotta admit, about the Tesla, because I made a post about it. I use it as a textbook example. Let's talk about it since it's on my mind today. Tesla up over 6% today. Let's do a little history lesson. So this goes back all the way to last year. So last year, the 50% of the entire rally going back to 2019, the weekly chart, the weekly trend of Tesla back to the low 2019, split adjusted $12 basically, all the way up to the all-time high. That level split adjusted, because there's a split in here, so these numbers are different, but we're looking at the key number here of 213. That was the flat line, the 50% of this entire trend. So I think we all know that over the course of 2022, it eventually broke below this level. Let price catch up to it here. And so held it, and then boom, now the bottom falls out. And now a lot of people are in what I call the valley of risk. Once you lose that 50% level, that is, you don't know where it's going to stop. But stop it did at the end of 2022. And then we had this January rally. And what it did was you had 100% move all the way up to, where's my line? Where's my info line? There we go. So yeah, 113% move off the bottom. And I know a lot of people were wanting more, but that level 213 was so clear, so clear. I had to short it, and short it I did. I had to sit in the position for quite a few weeks as it consolidated. But what was really interesting about this particular setup, let me go back a little bit, was not only I jumped into it when it first hit the level up here at the 50%. Got a little bit out of it, came up, made me a little nervous, but didn't hit my stop. And then it even set up a head and shoulders pattern. There's your shoulders right there. Textbook. And then we had the banking FUD, the big dip down on March the 9th when the U.S. dollar was going to fail, yada, yada, yada. And that brought it within $3.92 of my target. Frustrating. And then we had the FOMC, which basically defined where I was going to let this trade go against me. Look, if something comes within $4 of a target, I'm not going to let it come to red. So if we were going to break those Wednesday last week levels, I was not going to sit into it. I was going to give it a chance. I really wanted this thing to work out, but no. And so what would have been a really good textbook ended up being a gain of about 13 points on this. So it's okay because what this implies is that the market is bullish, and hopefully you guys, I really hope for your sake that you do have some long positions, whether it's your 401k, whether it is some long stocks. The ones that I've been able to pick up recently, Caterpillar, I caught back in the middle of March. That was just another clear 50% pullback. NCLH, which is Norwegian Cruise Line, I think there's a lot of upside on this one. I mean, this was quite the story during the pandemic. And again, if you notice, you had that drop for COVID, comes back up. There's you that 50% level. So key. That's why I talk about this. If you're new to this live stream, I don't use fancy moving averages or MACDs or anything like that. I use basically two fundamental elements of price action, and that is a 50% retracement. It's a 50% Fibonacci, if you want to call it that, but I don't use any of the others. And false breakouts. Whenever price shoots up to a level and then closes back within it, that's a false breakout, and it's a sign of a reversal. And so, yeah, that was the top there for the cruise lines back around 2021, and it slowly ground down. Now we have lows going higher, and I think there's a lot more upside to this. So that's been doing pretty well. Those are the two I put on this month. So I can't complain about a small win in Tesla if it's lifting everything else. Amazon is another one. Amazon also, again, the 50% of the entire history of Amazon. The 50 going all the way back to 2001, 22 years ago, the low 22 years ago to the all-time high, and pulling back and holding so far this 50%, 94.20, and I think it's just a really good buy. I do, and that's what the bearish year of 2022 has provided for us, an opportunity that a lot of people didn't know where or when it was going to come during 2021. It was so hard to buy anything during those bullish years, but we've had quite the pullback, and I know that the market, the financial news is full of fear, uncertainty, and doubt, FUD, about banking crises, the U.S. inflation, the dollar, blah, blah, blah. Look, I've never read the news any day that wasn't full of doom porn, and you got to be really careful. I think that's what it is. People like to consume the doom porn. That's probably going to get. Well, I'm not monetized on YouTube anyway, so I can say porn. But that's what it is. I mean, people really love to read about how bad things are, and then be scared. But I mean, it's fine to read that stuff, but look for opportunity. I mean, when the banking FUD happened, that dropped Bitcoin on that news. The news now says that Bitcoin is up based on the banking FUD, but no, no, no. On the day, on that Thursday, when Silicon Valley Bank, let's see, was crashing. Can we even have this thing? I don't think I even have data anymore on this. What's another bank? FRC. Yeah, so March the 9th, right there, boom. On that day, when all the banks, when all the FUD was in the market, that was the day to buy Bitcoin at, again, a 50% retracement level of the trend. But now you hear all the stories about how you need to buy Bitcoin for that reason. If people would have come in on March the 9th when it was down, I would have a lot more respect for that opinion. I don't respect it now. I think you're just coming back with an explanation for why something is up 25%, when the reality is it probably needs a pullback. And actually, it set up a spike this week. You've got on this Bitcoin range, boom. So Bitcoin is ranging right now, and you have a spike above it that happened, was it Wednesday? Wednesday. And while the S&P 500 and the NASDAQ have, in fact, made their push above the highs from last FOMC, Bitcoin did not. Bitcoin is showing a false breakout. So would not be a buyer of Bitcoin right now. If it breaks that high, if we see about 29,600, you're okay. That means you're getting a breakout. Make sure you get a daily closing bar above that level at least. But that right now, the top has revealed itself. So Wyckoff model, yeah, I've looked into Wyckoff model and things like that. But again, that's my brain is like very small. Like I don't know. I don't have time to have all the Wyckoff model screenshots in front of me to remember. So I just look for the false breakouts. Let me catch up with chat. For people business, could you tell me how you put this range in the beginning of the video? Is there an option for TW? What's TW? What range are you talking about? This is TradingView. What do you mean the range at the beginning of the video? Because the beginning of the video, I kind of played the NASDAQ. I played the NASDAQ from this week on the 1 minute, 5 minute. By range, I draw boxes. I mean, it's all the little drawing tools here that make TradingView really cool that I'm using. Crypto Free Lancer, thanks for following me this week. I think I gave you access to my spike indicator as well. Hope you're using it to good use. Let's see. You got it working, Jen? Okay. All right. If the 50% retracement is broken on the linear chart, do you think the next key level could be the 50% retracement of the log chart? I don't really like using log charts for trading. I think it's not appropriate to use logarithmic charts unless you have at least 10 years of data. For the sake of argument, let's look at Tesla on the, let's go with the daily. I'm going to clean this up. I'll redraw it if I need it in the future. But let me clean up. The indicators I use, by the way, you'll see me use Ichimoku sometimes because it's based on 50%. This retracement levels is just one that I drew, which happens to draw some of the most common 50%. That's just the 50% over 200 bars typically, with a little bit of mathematical changes to that. But that oftentimes lets me see those 50%, but I'm always going to go through and check them with the Fibonacci tool, which, by the way, if you want to replicate this Fibonacci tool. It's actually super simple. You pay $14 a month to my service. No, you go in here and you just take off the extra ones and you hit OK, and that saves your preferences. So that is the indicator. Use also spikes. The spikes indicator, that is another thing that I give away for free, though I probably should charge for it because that make people appreciate it a lot more. So let's look at a logarithmic chart. By the way, Discord plug. I have a Discord. Links are below. I don't charge for it. It's just a community. You need a team. The money I made this week in NASDAQ came from talking to people on Discord. I was being a little lackluster about things, but when they pointed out that, hey, NASDAQ is at a level, I saw the setup. Called it a Tinkinson recapture. So a logarithmic, let me take off my indicators because that's going to mess things up. So the thing about making a logarithmic chart, and this is on Tesla, if you start to draw a Fibonacci retracement, it's actually going to draw it linearly on the chart. It's not going to draw a Fibonacci retracement logarithmically. I wouldn't really want it to draw it logarithmically, honestly. I really wouldn't. I just don't think that is that's going to be an appropriate way to look at price or trade price, because what you're doing with a logarithmic chart, you're trying to fit a lot of data into something that kind of makes sense, but it's not really tradable. I don't need to use a logarithmic chart. That's the point. Like I don't see the advantage in using a logarithmic chart. As I said, the level on Tesla was pretty clear from the low down here. Yeah, I know you can't see all this little data unless you use logarithmic, but that low right there is the only one I need to really care about. And then the high, and then that sets up with that level there. Incidentally, from the high to the low there was also, again, a 50% that it held to the upside and triggered the down move. So what did you have? You had up 50%, 50%, and down. And now it's still holding this support turned into resistance because it broke below the support. Now it's coming back up to hit it. And I really, really, really actually still want to be short Tesla. I actually do. Not to knock anyone that really loves Elon. I love Elon too. In fact, I used to have a rule, and I guess I didn't follow it, not to bet against Elon. But again, the reason this trade didn't work, well, I don't know why the reason didn't work out, but the reason I didn't hit my target was because I was looking for that 50% pullback of this trend, but nothing in technical analysis is going to be 100%. We're not predicting the future here. We're just trying to find targets. And so we just missed that. Just missed it. 160 was what I was looking at to make a nice round number. And it just didn't quite hit it. Oh well. Not going to let that thing, not going to let a otherwise good textbook trade turn negative. Take the profit here and complain about it during the live stream. DXY. Okay, let's take a look at that. Again, if you guys have things to look at, put it in the stream. DXY, the US dollar, is interesting. It is very interesting. Let me just clean this up because I talk about it pretty often, and we should talk about it. So dollar is interesting because, again, I like to give a little history lesson when I talk about things. Let's go back to 2021. Okay, so let's go back in our Wayback Machine. Back to the end of 2021, where the DXY, which by the way is the dollar index, is the aggregate, was a weighted index of the dollar versus other currencies, mostly euro. Next highest is yen. Next highest is Great Britain pound, and then the smaller ones. The narrative, even Ray Dalio was saying that cash is trash. You know, the U.S. dollar, because of all the money printing, was going to get devalued. We're going to see Zimbabwe Weimar Republic in level inflation. That was what 2022 was going to hold. Stocks have been going up. All the risk assets, Bitcoin had been going up. You had to get rid of your dollars and just buy anything. That was the narrative. And I'm not saying that I thought it was wrong. It's very logical. This very smart people were saying it. It made a lot of sense that, with all the inflation, that the US dollar was going to be the worst thing that you could hold on to throughout 2022. It made a lot of sense. That was the narrative. But ironically, throughout 2022, because the Fed was raising rates, what that does in the Forex market is increase the value of a currency, especially when all its competitor currencies were keeping their rates at zero. Think about it. Central banks lower their interest rates to devalue their currencies. In other words, lower the value of the currencies so that their exports are cheaper and it stimulates their economy. So if every other country is keeping their interest rates at zero and we, the United States, is raising their interest rates, what does that do to our currency? Increases the value. During this period of 2022, dollar rallied. The irony is that the dollar was, counter to the narrative, one of the best asset classes of 2022. That tells you all you need to know about following the mainstream narrative. Sometimes I get accused of being an establishment opinion because I'm contrarian. I take in all this information from all my Bitcoin maxi friends and all my libertarian friends and all my trading friends. And then I ask, is this really what's going on? Or is this just what Kramer is talking about this week because it's popular? So that's the little history lesson on the dollar. And of course, what did it do after it peaked out at about 114, pulled back to the 50% retracement level of 102 and found respect. It found respect of that throughout basically this first part of this year. That was a nice little hold right there. And since that time, what's it done? It has come back once again to this 102 level. This 102 level is a key level on the dollar. I think you have to be long this test. This would be how I would structure it as a trade and in terms of an analysis. Like I'll look at an analysis on a pair, whether I trade it or not, in the framework of a trade. In other words, like a 3-to-1 risk-reward ratio. And so like any other level, what I'd be looking for is for it to show a hold at this level, call it a double bottom if you want. And this is going to be my default assumption of what's going to happen because it's a pullback to a major trend. Is it 100%? No. How do we know when we're wrong? Well, if price comes down to break 100, then we are probably breaking that level. I'd also be looking at it because this is such a long-term trend. I want to go up to the weekly. Let's go up to the weekly here. And so closes, a weekly close below 102. We had a few down in here. Actually, we need to draw this from the very bottom. I made a mistake in my drawing. Go all the way down here to the bottom. So let's still 102. Let's round it off. And we really want to see, we had 1 week here that closed below it back in the end of January. So what we're going to see in the future, we need to look for is the dollar's either going to rally off this level, or in the near future, what you may see is perhaps some weekly bars that close below it. Like if you see two big solid red bars, let's make those red. If you see something like this, in whatever way it happens, that's going to be a break. That's going to be a confirmed break of that level. And at that point, you can say that the dollar is going down. And this would make a lot of sense if we are actually in a bullish stock market. Typically speaking, stocks and the US dollar are inverse. Think about it this way. When people are selling their stocks, what are they selling them for? Dollars. When people are buying stocks, what are they buying the US stocks with? Dollars. So if people sell stocks, they're getting dollars, they're sitting in dollars in their account. What do they do when they buy stocks? They take those dollars and they go buy stocks. And so that's why you have that kind of inverse relationship. So That's what I'm looking at on the DXY. I think you have to assume long as it holds this level. That could change in the weeks to come. We shall see. All right. Let's see. Anytime you see the DXY increasing, it's a bad time to make a trade. Same for the U.S. 10-year. FOMC are criminals since 1914. Have you actually read the? It came up in chat earlier. The Creature from Jekyll Island. I'm sure you'd like that book. If you haven't, you should look it up. That's where they created the creature on Jekyll Island. Was it 1914? Was that when they did? All right, so SRX8. What Rivermat? What is SRX8? Is that hold on? SRX8. Is that a typo? Help me out. What is SRX8? Alibaba. Yeah, Baba has been doing pretty well. I think Jack Ma came out of hiding. I guess that he cleared up the concerns of the People's Republic of China. Baba is still not I'm not really a fan of Chinese stocks. Sorry, not sorry. The Chinese government can come in and destroy the stocks, as they did with Alibaba last year at a whim. I mean, they're not a fan of the stock market. I mean, it's a communist country. Yeah, this Alibaba was kind of a disaster for a lot of people last year. Could it be bottoming out at these levels? I mean, it reached its all-time low. Kind of got close, pegged it right here. On the weekly Ichimoku, I mean, what I would be looking for here is I'd use Ichimoku analysis, which you got the cloud, which is defining your bearish trend. You're finally starting to get in here. What I look for is a bullish bar. Well, let's do it this way. What I'd like to see is basically you to have a close on the weekly above the cloud, which would at the same time get your momentum or your lagging span out at the same time. If it happened very quickly, then it really would have to be somewhere around 150, it looks like. Or it could take some time to get out there. But yeah, this rally doesn't really help it get out of this consolidation. You really, what I would wait for is, maybe this to consolidate a little bit more and come out. I'd want some kind of a sign of a breakout. And because price has been consolidating so long in this range, a break like this is going to be pretty prominent and pretty easy to spot, actually. And so I would wait, because right now you're buying it in the middle of consolidation. It's better maybe than buying the top. But you got to understand that this could take a little bit longer than tomorrow, basically, or next week. If you were going to do an options play, for instance, you can't bet that by summer it's going to be up here, because it could go through a little more of that before finally breaking out later on this year. So it's just caught. It's just caught right now. All right, let's see. Anybody else? Oh, Wednesday NASDAQ trades and merger arb. Oh, yeah, let's talk about that. So one of the merger arbitrages that I've been in for a very long time, I think I talked about this last week, is Activision Blizzard. And this, I'm pretty sure I talked about that last week as well, but finally we're getting up to the high that it popped up to on the news. Now, I don't know if this thing is going to go through. I don't think that the probability for it going through has changed all that much. But as this expected date of June is only 3 months away, it does seem to be that people are starting to price in it going through a lot more. It's interesting. So I know we want to talk, Jen, about the Albertson. My mustache is itching me. That's why I'm scratching myself so much. What's Albertson's symbol? Is it ACI? ACI, yeah. So this is apparently in talks to be bought up by Kroger. Yeah. And I need to know more about it. First of all, why did it drop on earnings back in October? I just don't know that much about it. What I let me here's a the Activision Blizzard deal is different because it's a tech company. They're just going to buy all of the employees, the intellectual property. Albertsons versus Kroger, we're talking about retail, and this reminds me of a trade that I was in not too long ago. Well, excuse me, it was a long time ago. It was in almost 10 years ago. I remember it because it was a good one. It was a good trade because so here is Rite Aid, and Rite Aid is a drugstore, uh, based not upon any merger arbitrage news, but simply back in my early days as a trader, I recognized the power of the 50% level, and so you had this trade from 2012 all the way up to 2014 that pulled back to 95, 96 on Rite Aid. And that was independent of the buyout. I think Walgreens was going to buy them out. That news actually came here. Now, I had already played the trade up to this point and I had a runner on. But when it came up to this level where it was going to be a buyout, I think the buyout was going to be, this went through a reverse split, so these numbers are off. But the buyout was going to be somewhere like right here. It was not even at the high that it got up to. And so I closed out my entire position on that because there wasn't much money to be made in it. Now, you'll notice here this, well, what ended up happening here, the news here in 2017, was that Walgreens was not going to buy out the entire company. They were only going to buy out the locations of the most profitable stores, the most profitable Rite Aid locations. The rest of the Rite Aid locations were going to stay Rite Aid and/or just close. And that very much, it was no longer a merger per se. It was a, I don't know what you would call it, a selective buyout. And so the stock itself, Rite Aid as a company. And so that's why I'm really kind of hesitant in wanting to go into, you face these dangers in the past, and as they say, there's old traders and bold traders. I'm slowly, after a decade, going into the realm of old trader, and so I remember things like this. And so I would be very hesitant because, Albertson being a chain that has lots of locations, some are doing better than others. Kroger may or may not want some. There could be an Albertsons right next to a Kroger, and they're not going to keep it. So I don't know enough about this, but what I do know from history is when you have like retail mergers, it's not a straight out buyout situation. So that's my thought on that. One reason special dividend paid out to investors, Kroger is planning to buy all of it, and both Kroger and Albertsons will have to close some stores in locations that, both companies have stores. Yeah, that makes sense. Both sides are already planning to shut down stores. Okay. It's just going to be a no for me for that reason. I mean, first of all, it's not behaving like a merger should. I mean, you should see it. There should be, what's the buyout price for this? 35 a share. I mean, that's way on up there. This there's that's why it went down, because of the dividend, or they're going to do a dividend. It's too much for me to consider. It's too much. It's too much for me to think about. Waiting for your last comment. We'll talk about this a little bit more. All right, I'm gonna move on. So once again, if you guys have things to look at, post it in the chat. More than happy to look at things like that. Give my opinion, though it may not be one that you want. TLT, my quote-unquote trade of the year, is slowly going slowly, which is what I expected. This is why I told people, like, don't be trying to do this with options. I actually bought TLT proper. Basically this trade continues on. If the Fed increases the rate of rates, which doesn't look like they're going to, then TLT would go down. Fed does what they say, which was 3 increases in 2023. We've already had 2. It's possible that we may have 2 more. Then it slowly goes up, and that's basically what's happening. But if the Fed were to start lowering rates, in other words, if 5% was the high for rates, well, what's that going to do to the bonds that make up TLT? They're going to go up in value, and TLT is going to do pretty well too. So far, this trade trucks along, not quite at a 1-to-1 yet, but it held. Basically, I mean, this was a thesis trade regarding bonds, valuations, and interest rates, but it also, like all my trades, or all the ones that seem to work, was a 50% pullback to this little pump we got from October to December. So far, holding this, let's call it 100 level, more like 101 on TLT. So that's the key level. Came back in March, had that little banking FUD happen, couldn't really break it that much lower. So VIX had a little bit of fun into March. We got some actual volatility in there to sell, and now we're back down in the same realm we were from basically the beginning of the year. VIX is now once again nice and relatively boring. And we're not far away from getting down into the teens of VIX, which is basically where we enter a bull market, where we just slowly trend up. I've sort of started to notice on a day trading basis, these trading ranges, the day trading ranges on futures are getting, well, they were till this week's trend, getting smaller and smaller. So volatility is coming down. We're actually starting to enter into a potentially bullish market. We shall see. I mean, all the signs are pointing to it, basically, unless you read the financial news. What about SPX? Well, what about SPX? I tend to prefer to look at ES because I trade that on a regular basis, but SPX, of course. So SPX, just like the SPY, we would have been looking at the high from March the 6th, okay, right before we had this dip. And today, boom, close above it. Of course, now the real test for this market. Let me give you a little history lesson, as I like to do. SPX weekly. From the COVID low to the all-time high, bam. 50% level. Furthermore, from the all-time high down to that October CPI print low, boom. There's your January top. That January rally brought you there to the beginning of February. And so you have once again smack dab into resistance, which it held. The March brought it down to this level here, which my friends like to call auction theory, which is basically the bottom of that auction range, which it held. And so what are you about to enter into soon? Well, you're about to enter into yet another, which you did today, another range. And so what I expect going into next week as a default, predicting the future, is we're going to sit here and fight to see if we can get back above this 41.55. This is key. I mean, this level is basically, does the bear market for 2022 continue, or do we finally start entering into bullish territory? I'm telling you guys, if we do see a little push up into here, into April and May, it's going to suck because we're starting to go into the summer months, which are garbage to trade typically. But this is going to really make the case that this market is going to come back up to retest the high, despite all the FUD about how we've been waiting for this recession to happen for what, a year now, over a year. I'm still waiting for it, even though recessions typically aren't foreseen, which makes them so impactful. So, yeah, we got a little more resistances to clear here. We got to push through this level, but we'll see. We'll see what happens. But I mean, what we've done is we basically, from December of last year, ranged in here, and we're now back up at the top of this range of 4,100 on SPX. So, NOROC put up the DXY and US 10-year against with the same time frame. Do like a comparison. All right, let's do it. Compare. Is this how I do it? No. There's a way to do it in TradingView. Compare. There's a built-in way to do it. Is it up here? Hang on. Yeah, there we go. I knew there was a built-in way. All right. We're going to do DXY. Boom. Okay. Yeah, thanks, Jen. All right. So, inverse. Very inverse. Let me see if I can make it where it looks all nice and clean and everything. Can I move those? No. Yeah, that looks good. So, are you saying that the dollar and the stock market have an inverse relationship for the most part? Yes, I would be inclined to think that they do. They do tend to have a bit of an inverse relationship, but it's just really weirded out by 2022 when interest rates were so low and the dollar was rising. This is really the relationship that you should expect in normal conditions. 12, 13 years ago when I was trading Forex, on any given day, and that's kind of what you see today, on any given day that the stock market was up, you would see that the euro dollar was down. And so they would call it risk on, risk off days. And so, yes, definitely has an inverse relationship. I think I explained at the beginning, or I gave my explanation for the beginning, where, if you have stocks, okay, and you sell stocks, what do you get when you sell them? You get dollars. What do you buy stocks with? You buy them with dollars. You give your dollars for stocks. Stocks go up, dollars go down, vice versa. And risk on, risk off. Like the Karate Kid, risk on, risk off. Now add in how many MFers defaulting on their debts. Yeah, that's going to be an issue too. We shall see for that. All right. It's an interesting study to look at, especially in recent times. Yeah, it becomes even more clear. That's the euro. Wait. Of course that is. Hang on. Yes, yeah. So you can definitely see it. You can definitely see that, as this is going up, that's going down. This is going, nope. A little not quite there, but yes. Yes. Inverse relationship. So if the dollar breaks, I think we talked about this earlier. If the dollar starts breaking 102, if euro dollar can get above 109, again, euro dollar, well, it's the DXY basically, but it's also fighting its 50% retracement level from the 21 down to 22. 109 on the euro dollar is that key resistance that it's either going to double top or break. Where's my 8-ball? I need a magic 8-ball to say, but watch this level. They use one or other or both. They only need to be one to mess up anyone's trades. I've been at this 3 months and I still suck at trading. Well, you know what? I've been at this 10 years and some days I do too. Keep going. You'll be fine. Um, it's trading. What would I do if I was three? If you're 3 months into trading, I'll say this. Let me tell you something. It's good for you to be starting trading now, as opposed to starting trading in, let's say, the end of 2021. That would be a really bad time to start trading, because all you would have heard about is buy some 0-day Tesla calls. Fortunately, those people have run out of money and they've gone back to work and whatnot. But now it's a lot more interesting and a lot more rewarding, because you have a little bit of a bull market, but not one that's going to give you way too much overconfidence. You still got to work for your money in this market, but at least you're not getting ground down. You can actually sort through a lot of the BS, because, yeah, I don't think many people are following these hype. There's not really any hype going on right now to draw people in, except the occasional YOLO cryptocurrency, which, by the way, I keep a list of. Let me look at those YOLOs. So these are ones that people have come into the stream and taken a look at, and I've given my analysis of. So this was, I think, last week. Somebody came in with. Oh, let me clean this up. So last week, someone came in and they were looking at this UBX, and I said, "Hey, you need to break this high. Not bad, not good. Still going on. INJ USD. This is actually looking pretty good. You got some closes here up to the top. The injective protocol. It's injecting itself higher than that resistance right there after holding this one. That's pretty good. And BBAI, well, this is dead. This is dead. And it's dead because you had a chance to hold the 50%, just like Tesla, came back up to hit it as resistance. And you got a little pump right here today because everything went up. But this is not the same. So believe it or not, these hypes that I see, this one is okay. In other words, it hasn't broken down here. That would be bad. But yeah, up here. So there's still some good bullish stuff out there, actually, for sure. MCOM. Yikes. This is what you want to avoid. These kind of things are what you want to avoid. When I talk about playing these YOLOs, you invariably have the quintessential hockey stick. And you always want to basically use a little bit of simple technical rigor and look at it. There you got a high there, and you got a 50% at the 1667. And does it hold that level? It does not. Get out. And then you're going to save yourself this. Whereas with the UBX, I wouldn't fault you for getting out at this point right here. Again, you haven't missed out on much. It's just okay. But this one right here, this is actually a situation where you came down to that 50% level, held it, and now you're pushing up against it. That's what you want to see. You want to see this trend hold its ground, at least 50%. If it doesn't, it's not worth it. You're just going to end up bag holding. So look at it from a smaller time frame. Makes the percent up look bigger. I mean, yeah, if you use a magnifying glass, I'm sure it will. So coming to close to the end here. Anybody got anything else they want me to take a look at? Let me see if there's something I wanted to talk about. That I talked about my Tesla trade. RIP. Let's see. Trading. Let's look at Bitcoin. I talked about it at the beginning, but I know a lot of people, of course, want to address it. Bitcoin this week, since the FOMC from last week, it basically the FOMC from last Wednesday established this range of Bitcoin. What does the Fed have to do with Bitcoin? Well, that's because Bitcoin is still inexorably tied to interest rates, because people like Michael Saylor use borrowed money to buy Bitcoin, unfortunately. And what you have going on now is a spike a false breakout that set up on Thursday of this week overnight. And even though you have the NASDAQ and the ES pushing higher over their highs, Bitcoin is still caught in this range, and that sets up for a spike short back down to the bottom of the range, possibly over the weekend, with a stop above that high. Now, Bitcoin has been very spiky, but that is the definition of a range trade right there, with this false breakout to the upside. So defines your risk. Overall, though, it's a counter trend play because you still have the Ichimoku breakout, which began all the way back in January, still live. Began in January, pulled back to the cloud 50%, and up it goes. I still think that we're going to see probably 32K Bitcoin. This is a weekly, so it could take a little bit of time. I want to see a pullback. I want to see a pullback to this range, basically. Like what I really want to see is something like this before going back up. That's a nice pullback for a buying opportunity. Right now, after a 25% move up, I mean, come on, like be patient. Be patient. Like you got plenty of play up to it's Bitcoin, okay? It can move, but the biggest risk right now is a pullback on a long position. So if you're already long from back in January, or you're long from the 50% pullback, you're golden for a pullback. But over these last few days, these live streams, definitely don't want to be buying here. Wait for some kind of a pullback, possibly to retest that top of the range right there. So be wary. Ethereum, I mean, it broke the top of its range, but man, it's just not really performing that well. All the hype has been in Bitcoin. And okay, yeah, let's look at this. Ethereum versus Bitcoin. I don't need Ichimoku for this. But for the better part of the last several months, from September, you had this. This is Ethereum Bitcoin. This is Ethereum versus Bitcoin. And I'm remiss to not have noted this, but looks like from June of 22 to September of 22, this trend here established a very clear and well-held support in the crosspair between Ethereum and Bitcoin. And well, as we could infer from Bitcoin making such higher highs above its previous range and Ethereum just being kind of laggy, Ethereum versus Bitcoin is going out. It's broken the level. So Bitcoin is winning because Ethereum is not performing quite as well. My favorite, Monero, is not doing very much, but you know what? The best part about it is nobody knows if it's doing well in your account because nobody can see it. So there's that. First Energy, that's another thing on my list. That's not doing anything. And Kroger. I got to look at Kroger because Jen's going to be mad at me if I don't. The most volatile grocery store in the stock market, it's bullish. So, all right. Mikey asked me, do you ever look at market internals like the tick? Well, the lowest that I really want to look at this point in my trading career is a 1 minute. I have dug down to the tick chart when I was impatient and felt like I needed to have a trade right away, but it doesn't work. You're not a computer. You're not made of silicon. You're not going to be able to respond quick enough for a tick. That's the level for the computers. You have to be focused in the morning hours, and just in those morning trading hours from like 8:30 if there's news, 9:30 open until noon. In that window, I will look at the 1 minute, but that's the only time of day I'm going to look at the 1 minute. Afternoon, 12 p.m., I graduate up to the 5 minute, and those are the lowest that I'll go in, only for ES and NASDAQ futures. If you don't be doing it in Bitcoin, and don't be doing it in individual stocks. You just don't have the liquidity now in Bitcoin to justify a tick chart, and you don't have it in pretty much any stocks either. Just do yourself a favor in your learning process. Zoom out and trade the higher time frame. You're gonna get frustrated, and you're gonna take a lot of losses. I don't even try that because the probability is so low. You can be in a pretty good trade. All the technicals can set up on the tick chart, and then what are you going to do? You're going to find like this some guy at a hedge fund, fat fingers in order, and boom, hits your stop. That's the kind of stuff that'll happen on a tick chart. And you're going to think that your setup is bad. You're going to think that your technical analysis is bad when really you're just playing a harder game on the tick charts. So it's not going to be good for your education either to be on a tick chart. So that's my thoughts about a tick chart. Ed says, I'm thinking of going back 5 days and looking for resistance as my next strategy as a starting point for new trades when the DXY is below 102. Okay. Why go back 5 days? Phillips. Phillips? What company is Phillips? What's the symbol for Phillips? Because I thought that that's like a European. I didn't even know that's publicly traded on that. I only pretty much look at U.S. stocks, by the way, if I'm going to look at stocks. Look at YPF and many other stocks making the biggest gains in the last 1.5 hours. Hold on. YPF is Sociedad Anoma. Is that a bank? Today was a bullish day. Everything's up. PIHA? PHA. This is Euronext Amsterdam. Okay. All right. I'll give you my analysis. It has been going down for a while, but what I would look at is when it made a low and it did this pullback here, you had a really, really good opportunity on March the 23rd. And I know that's looking back in time, but that is what I would look at. Again, this just reaffirms what I say throughout my entire live stream, 50% retracement levels. This is when you have to take opportunities. You know, just very recently, clear opportunity, Caterpillar. Caterpillar down to a 50% level. You got to be looking when you see these things. The problem now with this is you've come up to this high. And so if you're a trader, as am I, then you got to be looking at this as your take profit for the long that you would have entered into down here. Like this to me, 3-to-1, that would have been a trade, okay? So you got to bear in mind that now that you're at that high, you need to have a breakout confirmed before you start buying it at the high, because that's just what we look at. You know, here's a low, price hit the low. You can't go more short. Price tends to hit these resistances. Not all the time does it stop there, but enough times that you know you need to take some profit. More importantly, you don't want to enter a new position unless you're willing to give it a really big stop. And so I would be very hesitant to buy it now. If you're already in a position, you're in a good shape if you bought it anywhere lower, but it's hitting the resistance from the beginning of the year. You got to be careful. What you really need to see in this, let's take a look at an Ichimoku level. It's starting to trend bullish, but what I would want to see, you really need to be in it back here or on this pullback here. Again, the reason I use Ichimoku is because very often times, what does it do? It sets up that bottom of the cloud right at the 50%. Wow. But yeah, you got to get a close above here. You got to see, let's say, like a big green bar next week. Above that level, get a big solid close above it, and you can be good to go there. So that's what I look. My biggest problem is noticing everything after it has occurred. Check out YPF and that's going to be your biggest problem because everything is obvious in hindsight. And that's why I always kind of preface it when I say this is where you should have bought. I know that's useless at this point, okay? But that's also why I put out my trades on Discord or on TradingView when I take them, because I also get tired of people that come back and say, "Oh, look, I bought this here." Yeah, of course you did. You're posting on social media now. We don't know if you bought it or not. No, I hate that. But the reason I use these as examples is so when these opportunities happen, you can potentially get them. All right, so YPF is what is it? What's the word for YPF? It's a beautiful stock to day trade when oil. What is it? Is it this Sociedad Anonima, or is it something different? Huh. Look at XLF and back. Oh yeah, banks. What is the we should look at XLF. Little recovery there. Little recovery there on the banks. Bank of America. Yeah, let's look at that. We need to keep an eye on banks. Oh. I call this, and I use this on a day trading level because it's Ichimoku, the red line that you see that I'll almost always have in my chart. It's the short-term 9 period, 50%. It's called the Tinkinson. I don't know what it actually says in Japanese, but that is a key level for reversal. May or may not pull back to it, but with banks, Bank of America, what do you have in this little dip here from last Friday? Now you have this little rally this week. It has set up what I call a Tinkinson recapture, which means you need to, you, the viewer, anyone watching, need to set an alert on Bank of America for a pullback to the 50% of what I call this little reaction here, this little push up. Just like I would look for a 50% on anything, you want to look for a 50% of this little reaction, pull back to hold it. What that does is that sets you up with an initial trade, put your stop below that low. You're basically betting that the low is in. And then your target is going to be the 50% on the way back up. Hopefully we can try to get a 3-to-1 out of this. But that's going to be a 50% pullback to this down move. That's your first target. So good note on that. This is doing a daily time frame at Tinkinson recapture. So set alert at 28. TFC, another regional bank. It actually did not pull back to it yet. Getting a little wonky, but 32 is the level there. You're already in, buy more. If it pulls back, if you want to, I just hold on to it. What you want to see here on Bank of America, Ed, I don't really look at fundamental stuff like PE. I actually don't, because when you have, Ford Motors, last year they had a negative PE and their stock was rallying tens of percents. And then you have, stocks like Tesla, which had 100 PE. I just don't find PE to be a very tradable metric anymore. This is what I use. It's my thing. All right. So what you really want to see on this, it's either going to pull back to here or you're going to get a close above Thursday's high. And that's going to be bullish for you on Bank of America. All right. I am spent. So thanks for joining me, guys. Thanks for spending your Friday with me. Hopefully, what if they have $200 per share? This is what I do, Ed. I look for price action setups. If you can find some use of PE, I'm not going to knock it. This is just what I do, and that's what I like to share with people. So thanks for bringing this up. Thanks for your commentary as well. I appreciate it. And thanks, everyone, joining. By the way, link below. I have a Discord. You need a team. The team this week helped me find this little opportunity. I came in Wednesday, not particularly interested in any trades. Where is that? Where is it? There it is. Wednesday morning, someone happened to point out that, hey, look, NASDAQ was pulling back to the top of this overnight range. I was like, you know what? Yeah, that is, just like we were looking at Bank of America, a Tinkinson recap. Got back above that red line. And that set up the trade for pretty much the week. Not saying I got out here, but you always wish you had a runner for the ones that run. So thank you for joining me, guys. Thank you, and have a great weekend. Trade wisely. We'll see you next week.